I want to start off with just the basics of options. I think that so many younger traders, newer traders, we have an SPX craze with the zero DTE. And I feel like so many people get so hyper focused on that when they come into options. It's funny. I have a Discord and, I talk with so many traders and so many of them really just focus on that zero DTE game versus just understanding options as an overall tool and when they should use that tool. You're someone who obviously with options hawk, you're an option specialist. So you understand options, in a way that most people probably don't. They're coming in and just trading them and not knowing them. What are the basic reasons for someone like you or for anyone out there who understands markets and they understand their strategy as to why options is such a great tool to use and going beyond just zero DTEs?
Yeah, so I guess the basic premise of it all is the fact that they're dynamic deltas versus static deltas. So if you compare 100 shares of SPY, for example, or one futures contract, you're going to get the same delta movement or per share equivalent, whether the market goes up, 10 S&P points or down to 10 S&P points. But when you're buying a call, let's say you buy an at the money call, right? That's 50 deltas generally. So you're going to have the exposure of 50 shares of SPY. But if that underlying goes lower, you're only going to lose that 50 shares of SPY. So that delta equivalent is going to cap your risk. You're going to define your risk by buying a call. If you're long stock or you're long futures, you're just going to keep losing $50 per point the lower it goes. Same thing on the upside, of course, because you have unlimited upside. But the nice thing about options is that once they start going in your way, like let's say you're up 50% on an option or 100%, you can adjust your strike higher. So if you bought the 100 strike call and now it's at 110, well, you could sell your 100 call and then buy the 110. Now you're adjusting your strikes higher, and it's kind of like locking in a win already, right? And staying exposed to the upside. That's what I see a lot of institutions doing on a daily basis with winners, just riding trends higher and focusing on that exposure to the upside as long as the trend is higher.